Hi friends, welcome back. So question for you in your neck of the woods, should you rent or should you buy? That's the subject of today's video, and let's just jump right in. So the headline, is it cheaper to rent or buy property? This is a headline from a couple months ago from The Economist. It's a few months old, however, it is still relevant today as we'll go through the data you'll see. Moreover, this was a recent headline, March 22nd, 2024. Wall Street Journal, the new normal for mortgage rates will be higher than many hope. So if you're looking to get into a home now, probably your rate's going to be around 7%, something like that. And in fact, this is actually really interesting. Going back to the question of should you rent or should you buy, coming from The Economist, and you can see there's two charts here of the USA, 2020 and 2023. So basically, the way you read this is that in the sort of brown to gray areas, that would be cheaper to buy. In the pink to red areas, that would be cheaper to rent. So there's definitely a transition now to where in 2023, in most cities, I mean, you guys can see right there, right on the map, it is cheaper to rent. And it's going to be a wild all over the place, because I mean, wild is, I noticed the kind of the big changes were here in this. I guess you would call that I don't know, what would you call that? The Mountain West, I guess that would be that area of the country. I see a lot of cheaper to rent than to buy. I'm curious. I don't live in this part of the country, and I haven't. So this would be looks like Idaho. That should be testing my geography here. Like Wyoming, Montana. That should be. Let's see, that's Nevada. So that one should be Utah, and this should be Colorado, I guess. And if anyone's in this area, I'd like to hear your thoughts on this. According to this, at least in 2023, it's cheaper to rent in these parts of the country than it's to buy. I have lived in LA, and this is sort of California. I do know that's true there. And obviously, again, it's going to be depend on your neck of the woods. It looks like, though, it is still cheaper to buy in if you want to go to Texas. I noticed that cluster there. And then this would be like your Mississippi, Alabama, kind of your southern area over here in Louisiana. Moreover, this is actually a projection of where mortgage rates are going to go, because obviously that matters quite a bit, considering most people don't just pay cash for a house outright. Usually people get a mortgage. And it says here, economists at Fannie Mae this week increased their forecast for the average 30-year fixed mortgage rates to be 6.4% on average in the fourth quarter of 2024. So again, they're thinking that maybe in 2024, your mortgage is going to be 6.4%. And that's up. They originally thought it would be 5.9 by the end of this year. And then also says here, they're also expecting an average rate of 6.2% in 2025. And then they're saying right now it's at about 6.87. But again, it's going to depend on your particular situation. I just want to give you guys some projections, and you use these numbers to sort of consider, is it cheaper to rent or to buy. The CBRE came out with something interesting as well, which is kind of corroborates a lot of this data. Their headline was, renting will be likely less expensive than buying a home for some time. So this kind of map, as I just showed you guys, may end up being like this for a while. But let's read some of the reasoning coming from CBRE and also The Economist. This is from The Economist here. It says, for years, new home buyers in America have enjoyed lower housing payments than renters, right? So that would be in the past. Between 2011 and 2020, the monthly mortgage payment on a typical home was 12% lower than the rental cost of a similar property. And that's, you have to make assumptions here. So you're assuming 13% deposit. A steady rise in home values, right? So prices are going up on houses. So with 7% a year over the past decade. Is that sustainable? Probably not. But we'll see. Let's keep reading through this, because there's a lot of caveats here. Also, insured buyers build equity in their homes, right? So when the housing market keeps going up, people are like, well, obviously you can make money in housing, and more people jump in, of course. But as our maps show today, the choice between buying and renting looks very different. Here we go. Blame high house prices and soaring mortgage rates, right? So why is the rent, the cost to rent and the cost of buying, the way that it is? Meaning that, why is it, maybe cheaper to rent? Since 2020, nominal house prices have climbed by roughly 40%. So if you guys get the gist of it here. If home prices are too high in your area, and then also interest rates are also high, put those two together, it's more expensive to buy a home than it is to rent. In the same period, the average 30-year fixed mortgage rate rose from 3.1 to 7.3, so that's a major change, of course, lifting the mortgage repayments on a typical house by more than 50%. Okay, so your mortgage is going up quite a bit. All this means nominal mortgage payments more than doubled since 2020. Rents, by contrast, have risen by roughly 20%. So you can see here, you have, right, your mortgages went up by quite a lot, 50, where your rents, they did go up. So it's not like they didn't, but this is, and again, this is on the average, so it's going to depend on your neck of the woods. Went up by 20%. You guys can see the numbers there. By our calculations, for 89% of Americans, renting a 2-bedroom dwelling is now cheaper than a comparable property 3 years ago. The figure was 16%. So here, and it depends, right? So here we're comparing 2-bedroom places, right? So it's cheaper for most Americans to rent. So let me show you this chart. This is predicting where rents and mortgages are going to go in the future. You can see here, so we are projecting that your rents are going to go up, but it's still not going to catch up to the price of a mortgage, right? So where are we? We're around 2024. So your average rents in the, I'm just kind of eyeballing it here, in the 2100, 2200. Your mortgage average is around right around here. So 2024 looks like around 3000, 2800. Now, if mortgage rates do go down, right, so then your payments will go down, but it still won't be cheaper than renting. And then rents will go up. Say this is a long ways away, but just an idea of where the trend line is going. In 2028, so maybe your average rent will be 2500, but then your mortgage will be something like, just eyeballing here, maybe around like 2800, something like that. Let's keep reading more, but this, again, these are projections. It says our calculations do not cover long-term potential costs and benefits, such as outlays of maintenance, right? So there's a lot of things that you want to consider here. So it's not just your mortgage payment, right? You have maintenance, the asset value of the home once the mortgage has been paid off, right? Is your home going to go up in value? Or the opportunity cost of investing in a deposit for a house rather than, say, the stock market, right? So if you're saving up for a home and you want to keep it safe because you're looking to buy, but what if you theoretically put all that money in the market, be it an index fund, or if you're even more crazy, put it in Bitcoin, you would have done quite well. So this is sort of where it's hard to predict if it's worth it necessarily to buy a house, but it all depends. So when you talk about these kind of things, it's not just the value of your home. It's just that maybe you want to live in said home and you like that area, and that's sort of where you want to put your roots down, etc. So here we're just talking about numbers, but certainly though, it's also, to be fair, if there's a certain area that you really like, you could also rent in said area if the cost is considerably cheaper. So this is sort of all the considerations you want to go into when we talk about these things. Moreover, you can see here, but they do show how the relative costs of buying and renting have been upended throughout much of America. To restore the ownership advantage, meaning that how could it be more advantageous to buy, that prevailed in the 2010s would require dramatic shifts in market conditions. By our reckoning, house prices would have to tumble by 1/3. So in order to make, again, buying a house more attractive, they're saying here, as the economist, is that house prices would have to go down by 1/3. And then average mortgage rates would have to fall to 3.2%, or rental costs would have to rise by at least 50%. So it's really interesting when you think about these numbers, right? So and again, just to understand this stuff, if just talking about numbers, if it's more attractive to buy a home, you need the prices to come down basically by 1/3. You need your mortgage rate to go down to 3.2, but that's not going to happen anytime soon, at least according to Fannie Mae. And then or rental prices go up, say, by 50%. The other thing too, I was thinking about this, is that which is not mentioned here, but I mean it's probably mentioned in terms of like just the owning a home stuff. But in some parts of the country, home owners insurance is like really, really high. Florida in particular, we talked about that, and my understanding is even some of the insurance companies won't even insure homes there anymore. It's so ludicrously expensive. So since there's less insurers that will willing to do it, you have to pay tooth and nail to do that. There's also a housing shortage, which we hear about quite a bit. So we're saying there's around, this is in terms of houses, I think it's like 3.8 million, something like that. This is in 2023. So theoretically, if we want housing prices to come down, as they mentioned before, by 1/3, we'd have to say maybe build more houses, that kind of thing. Also, too, you guys remember we talk about this all the time. People aren't moving that much, so if you're in a low mortgage rate right now, like 2%, there's no reason for you to move necessarily. And so there's and actually the big one that's lacking in the current market now is for first-time home buyers, affordable homes. There's a lot, and we talked about this before. There's a lot more profit for home builders to build more like luxury end type housing. So it's kind of a how can I say, it's kind of a hard to have a system in place when companies are going to do what's best for them in terms of making money, not necessarily what's best for you, the consumer. But we'll see, because overall this is a market. If people aren't willing to pay the higher prices for said luxury homes, etc., then yes, prices may come down, and yes, they may say, well, maybe we should build more affordable homes. Let's see what else it says here. This is coming from Goldman Sachs. Some thoughts. It says none of these outcomes seem likely. Housing prices are not expected to crash. That's according to Goldman Sachs. Forecast they will appreciate 1.9% in 2024, 2.8% in 2025. So they still think housing prices will continue to rise. And I point out these numbers because remember, if we talked about earlier in this video, they were saying like the average home appreciation was like 7% for like a decade. But they may not see that happen again, right, anytime soon. So this is the current projections of what home appreciation. And again, it's going to be depending on your neck of the woods. Every market is different. Mortgages are expected to stay pricey too. This is what Goldman thinks. Goldman predicts the 30-year mortgage rates will dip, but not by much. 7.1 by the end of 2024 and 6.6 by the end of 2025. That is different from the Fannie Mae one. What were they saying? They were saying, weren't they saying like 6.8, I think, something like that? Yeah. Fannie Mae was saying 6.4, no, yeah. 6.4 by 2024 and then 6.2 by 2025. So Goldman is coming in higher. Again, Goldman was saying, what was it, like 7.1 by the end of 2024 and 6.6 by the end of 2025. So as mentioned to you guys before, it all depends on your neck of the woods. This is a really interesting chart. It's comparing the difference between rents and mortgages by various cities/markets. And we're looking at the big metro markets. So kind of your big gap, which I just talked about, Southern California would be like your LA or Orange County. And you can see here, you're running around, was it 2.7 times? This is a mortgage to rent. And then it may come down. This is the forecasting here in 2028. So 4 to 5 years from now, maybe it goes down to like a 2.2 or something like that. Now, compared to a nation as a whole, right, the country, it's actually quite different. So if you compare, say, your rents to mortgage, and this again nationwide, you're looking at maybe it comes down from, say, like a 1.4 to maybe like 1.2, something of that nature. But again, it's all going to depend on where you are. If you're in Seattle, there's still a big gap between buying and renting. Vegas is the same. Denver is the same. Yes, the multiple will come down, meaning that it'll be a little bit closer to the decision of renting versus buying. But there'll still be a gap there, and so this is sort of why that the headlines are saying, hey, it may not be right. It may not be necessarily advantageous to buy for some time, because again, you have to consider all of these things, right? You have all the costs of owning a home. How much will your home appreciate, and also too, what interest rate are you going to get with your mortgage, and of course, what is the price of your home going to be? This is a deeply personal question, and I want to just throw this stuff out here for you guys to be thinking about, because one of the things that people do, the older people, they'll say, well, when I was a kid, we did X, and we're so happy that we did X because this happened. But what happened for them in the market that they were in may not necessarily be the one that you're in today. Everyone's in a very, very different situation, and also too in a different market. Some markets, right, may continue to be in a crazy bubble and just go up forever. And yes, maybe it is not a bad idea to buy because it's a hot area, right? And so you're looking at, you like to live in that area, the home's going to appreciate, right? So it just kind of makes sense. You can get a good rate. But there could be the reverse, whereas you buy a home or whatever, and then the maintenance is horribly expensive. The homeowner insurance is too much. The homeowners association is like ridiculous. They want you to fix up your lawn, and it costs a bunch of money to do that. Maybe turns out you were in a bubble. So something like in Idaho, Coeur d'Alene, you bought way too high. You got a high interest rate. Maybe you lose your job, and then you can't even sell the house for what you paid for it. So the reason why I'm just giving you different scenarios is because I just want to put all this stuff in your mind to consider. What makes sense, for you, and to look at all of these things. Don't necessarily just take someone else's scenario and someone else's situation as being the same as yours, because yours may be different. And it's interesting to take a look at this stuff because, again, the Fed, when they set interest rates at a certain rate, it affects a lot of things, right? We talk about the market in terms of stock market quite a bit, but I want to mention the housing market as well. And we'll keep an eye on this stuff together. And always like to hear from you, and also to hear from people around the world, because your experiences may be different than what's happening in the USA. So thanks again for watching, everyone. Please share your thoughts on this, and I'll catch you next video.